Now we come to the part of the show where we talk about three things that individual investors need to focus on before they make their investment decisions. As you can see, here are our topics for this show. Will the Fed cut interest rates this afternoon? We will have a Fed decision in a few hours. The talk is that interest rates will drop another quarter point. We're going to discuss that. Tech earnings this week. We've already received the big bank earnings out of the US. We've received a few earnings here in Canada, not much as yet. Rogers, for example, has reported earnings. Celestica reported pretty good earnings as well recently, but now we're moving into the big tech space, the big cap tech names. Let's talk a bit about that. US President Trump and President Xi of China will meet this Thursday. That is what is on the docket. They will meet out in South Korea, and definitely headlines from that meeting will be market moving. There is no doubt about that. We know that anytime we talk trade between the US and China, that alone is market moving. Not to mention them meeting, I think, for the first time in quite some time. I think it's been a few years for sure since since President Trump's first term, and we'll see what headlines come out of that. So these are the three things that I think you need to focus on, and then start by delving into each one on their own. So first one, will the Fed cut interest rates in the next few hours? And this is something I think the market is pretty much taken in stride. You know, the fact that they're going to cut interest rates 1/4 point at 2 o'clock this afternoon, and we'll hear what the Fed has to say after that. But I think the question more for the Fed will be, what will they do in December? They do have one more meeting this year. We know that the Federal Reserve and what they do with interest rates is far more important for the markets than what the Bank of Canada does here in our country. We know that what the Bank of Canada does definitely affects our dollar, but what is the Fed going to do? And will they cut once? Will they cut twice more before the end of the year? And that is what right now is the question that is on the table. And what will the Fed use? I guess, well, it's tough to use any economic data or any data that's released out of the government, because the government in the United States is currently shut down. So the only news or the only data that they've received recently is CPI data. Inflation data was released recently out of the US. It was collected just before government shut down, and it was released. And we're going to be using, or I should say the Fed will be using that data as part of all the other data that they have to make their decision. Our first chart shows what the inflation rate is, the consumer price index in the United States, as you can see, coming in at 3%. It's been hovering around 3% for a little while now. I guess it was just below 3, and now it's come up to 3, and it's been there for the last few months. Our next chart is a bar chart, which shows U.S. Consumer Price Index on a monthly basis. And you can see here that 0.3% is what the last reading was. And again, is it anything that wasn't expected? No, it came in roughly as expected. Our next chart is one that I find now a little bit more interesting than we found before. And this is the Fed policy interest rate chart. And you can see here, there it is. You can see a little bit of a tick down. And that was the last interest rate decision that the Federal Reserve had, bringing down the rate to 4.25. Yes, keep in mind, in the United States, they do have 4.25. They have a range versus everywhere else where they just give you a rate. In the United States, it's more of a range. And why I find this so interesting right now is that, is the new rate for the Fed, they talk about their target for inflation being 2%, but is the new 2% 3% in the United States? Well, one would say that's not true. I think if you ask Jerome Powell, he would say, no, our target is still 2%. Well, and my question would be, then why are you cutting interest rates when the rate right now is 50% higher than your target rate? How does that make sense? And I think that's a question that the Federal Reserve would struggle with. They're going to answer it by saying, well, they have a dual mandate, which is right now they're focusing more on jobs and jobs growth than they are on inflation. And the readings that they've been getting is that jobs growth is quite weak. And so they want to focus on that. Cutting rates hopefully will stimulate and produce more jobs. So interesting that we see this tick down. So is the new 3% the target? And they're just maybe not sharing that with us. I guess time will tell. Our last chart in this for this segment, for this part of the top 3 things to consider before you make your investment decisions, is what the probabilities are that rates will be cut going forward. You could see 96.7% that there will be a rate cut today. Only just over 3% that they will stand pat. More importantly, as I said, will they cut in December? Well, if they cut now, it looks like they have a 90% chance that they're going to cut in December. So we're looking at, chances are, to see 2 rate cuts before the end of the year. And then we go into early next year, and you're looking somewhere around 46% that right now that they will cut again come the end of January. So the probabilities are definitely there for rate cuts. We'll see if the Bank of Canada follows suit and cuts twice as well. We're not sure, but we'll have to see how that goes. But keeping an eye on what the Fed does is extremely important for the markets. And when that inflation data came out, the market breathed a sigh of relief, saying that basically, if with inflation coming in as expected around 3%, the Fed has a green light to cut rates. And obviously, that's good for the market. Second thing to focus on, tech earnings. We're going to get 5 out of the 7 stocks you see there, known as the Magnificent Seven. They're going to report earnings in the next couple of days, after the close today and after the close tomorrow, Thursday. And we've already received earnings from Tesla. They were not good at all, yet the stock popped on the earnings results. I think it was because of the commentary that Elon Musk had with respect to robotics and robo-taxis and all the technology, not so much because of the cars, but because of the technology that is coming down the pipeline in the not so distant future. But we're going to hear from Microsoft, Alphabet, Amazon, Apple, and Meta. We're going to have to wait a little bit for Nvidia earnings. I think they're coming out sometime 3rd week in November, somewhere around there. Our first chart shows the Magnificent Seven, why they are so important, as we've said in other telecasts. $20 trillion is what the Mag 7 make up of a $30 trillion US economy. And those Mag 7 names alone are bigger than the Chinese economy, bigger than the second largest economy in the world. Mag 7 names are, if you combine all of their market caps, they're bigger than the Chinese economy. So very, very important. You can see here the Mag 7, the chart going from the bottom left to the top right. And obviously, technology as a whole makes up, depending on what parts you include, but overall, I would say it probably makes up about 35–40% of the S&P 500. Our next chart shows the actual stocks themselves and how they've been faring this year. You can see actually Tesla. Yes, Tesla actually has been the best performer. And one name that you probably wouldn't anticipate, Alphabet. Alphabet has been the best, or the second best, I should say, performer. And then you have a bit of a cluster there of the other names. Nvidia, Meta, Microsoft, Amazon has been the second worst performer. And many believe, including myself, that because it has been an underperformer versus other big cap tech names versus other Mag 7 names, excluding Apple, that Amazon would be the one stock to take a look at, perhaps, if you're looking at buying shares of a good growth name, one of the Mag 7, and a big cap tech name. Amazon might be the one because it hasn't moved up as high as the other names as yet. I would say when we look at the big cap tech names and we get their earnings reports and we hear the conference calls, the CEOs on their calls, probably the number one thing for the market, yes, aside from how each individual company is doing, what their bottom line earnings are, what their top line revenue growth is, what they're saying, how are things looking going forward. But I would say the number one thing that we're all going to be listening for is spending. Are these big cap tech names, the Mag 7 names that have been driving the AI spend, are they going to continue to spend? And are they going to continue to spend at the rates they've been spending? Our next chart just shows how much these companies have been spending. Look at that CapEx spending amongst tech giants. Upper top is Amazon, and you have Microsoft. Look how that has ramped up from the bottom left, almost in a straight line up to the top right. Alphabet, Meta in the bottom there, just spending outrageous amounts of money. This is quarterly spending, so you can see between 30 and 35 billion just for the quarter in Amazon, which will take you well over 100 billion in spend. Microsoft coming in between 20 and 25 billion. And then you have, Meta, 20 billion. You have Alphabet around 25 billion. This is a quarterly spend, and it's unbelievable to see how much these companies are spending on the build out of data center infrastructure, AI, chips. And who's going to be the benefactor of these companies spending all this money? Well, it's going to be the Nvidias of the world, the AMDs of the world, and recently, perhaps, maybe even the Qualcomms of the world. They just announced a chip in the last 24, 48 hours as well. So tech names, very, very important. We want to keep an eye and an ear on what they have to say and what they're saying regarding their spending. Our third point to consider before you make your investment decisions is one of more to do with a meeting, right? A meeting between the two superpowers. President Trump, President Xi out of China, set to meet in the next, let's say in the next 24 hours or so in South Korea. It looks like their meeting is still, at least from what I know, on track to happen. The groundwork has been set by the Trump administration, the high-level representatives from China, from the U.S. They have already been meeting up in Malaysia, talking about what a trade deal between these two largest economies in the world will look like. So any news, any headlines, anything coming out of this meeting on Thursday, a day from now, will be extremely important. And why will it be so important? Well, our first chart clearly shows how the S&P 500 moves with respect to any trade information or trade updates from these two countries. You can see on the far left, when Trump signed order of tariffs on Mexico, Canada, and China, what happened to the S&P 500? It went down pretty much from the top left to the bottom right. S&P 500 confirmed that it was in a correction mode. You had Liberation Day, tariff announcements. The stock stock market dropped significantly. S&P straight line down right after that. And then we started to see things getting a little better. Many tariffs were paused for 90 days. U.S.-China forged a truce on tariffs. You could see the market getting better and better based on those headlines. Deal to get U.S.-China trade truce back on track is done. We kind of fell off the rails a little bit there. We had a bit of a blip. And now today, if you go all the way to the far right-hand side, Chinese and U.S. officials hash out framework of a trade deal. So you can see that the market is moving in lockstep with these headlines. And is it a surprise? Absolutely not. You're talking about the two largest economies in the world, and anything that happens between the two of them will be market moving. Actually, an interesting chart I want to show you next, and that's a chart of technology. And we call it Invesco QQQ. There it is. This is the index, ETF, if you will, that follows tech, big cap tech. And if you were to remember the chart we just had, and you were to put this chart on top of it, it would look almost identical, because what has happened over the last, let's call it 8 months or so, technology has been the one thing that the United States has held over the Chinese, not sending chips, threatening not to send software, not sending chip equipment over to China. All these are things that the U.S. said, you know what, we're going to slow this down because we don't want China, this is the U.S. talking now, to have the best equipment, to have the best chips to match the United States. And so what has happened every time they make an announcement, tech pulls back if it's a negative one. But now the talk is about perhaps a trade deal. And I guess the tech sector is hoping that it's going to involve being some sort of tech deal and allowing chip equipment companies chip companies themselves, semiconductors, to be allowed to do business in China. And that's the case. We're going to see the Invesco QQQ and tech stocks move a lot higher in the coming quarters. So this is something that, as I said, we want to keep an eye on the Trump and the President Xi in China, what they're going to say coming out of their meeting in the next 24 hours. We also want to keep an eye on tech stocks, what they say, how their spending is going. And I guess first and foremost, right away this afternoon, we're going to hear from the Fed. So as an investor today, you want to keep an eye on these three things because these are the most important things, in my opinion, you should be watching before you make your investment decisions.